In the boom years, people were desperate to get on the property ladder, and for many, an interest-only mortgage was the only way they could afford it. First-time buyers banked on their new home rising in value in order to cover the cost of lending. But now the bubble's burst. House prices have crashed and millions are in negative equity. Jonathan Davis, an economist and wealth manager, says many families could lose their homes.
We have many, many families who may in due course be made homeless because of this, because they will not be able to pay back the debt. And unlike the bankers, no one's going to bail them out.
There are 2.6 million people in the UK with interest-only mortgages. Research from the Financial Conduct Authority says 37% of these people won't have enough money to pay back their debt. And while 90% say they do have a repayment plan in place, 10% admit to having no idea what they're going to do. Julian Wadley from the Council of Mortgage Lenders says borrowers can't put their head in the sand.
I think the key message that we took away from today is that 90% of interest-only borrowers do actually have a plan in place. And I guess it's a warning for borrowers that don't have that repayment plan, that they do need to heed advice from their lenders and start putting something in place. It's vitally important that the industry does contact all those borrowers that do expire before 2020 in the next 12 months. And they've actually said, all lenders have said that they have been doing that and they will be doing that over the next 12 months.
The FCA's report also says it's not clear how well some borrowers understood the terms of their mortgage. 13% said they were not aware that they needed to repay the whole amount borrowed, not just the interest. There are now calls for a wider investigation into mis-selling. Matt Griffith is from the campaign group Priced Out.
I think the evidence of mis-selling is limited, and that's what the FCA said in today's statement. So I think there was kind of willing blindness on both parties rather than mis-selling. So if you take out interest only, you have to be pretty financially savvy, disciplined, and able to deal with other sources of investment over quite a long time. And a lot of the consumers who took out these products wouldn't have thought about that seriously, I don't think.
The report named the biggest providers of interest-only loans as Santander, Halifax and Nationwide. It also indicated that if people were unable to repay their debt, banks were often extending their mortgages as well as switching them over to repayments. Robert Dibb from the mortgage advice website FirstRungNow.com says lenders will try to help where they can.
You can change to a repayment mortgage at any point on most mortgage contracts. So generally speaking, you've got the mortgage product itself, so that's whether it be a fixed rate or a discount or a tracker, and that bit can't be changed during the introductory rate period. With regards to the way it's repaid, most banks are quite flexible in how you repay the loan. Less so now than they were, but if you're on an interest-only mortgage product at the moment, most banks will allow you to change to repayment, and lots of banks will have no cost implications of that at all.
The FCA say repossession should be a last resort, used only after all available options have been considered. It also advised those worried about the terms of their mortgage to contact their lender sooner rather than later.